seeing this from the business owner's lens, not from the landlords or property management perspective or the ownership perspective, but from the business owner's perspective of helping them understand.
People who are renting the property.
Exactly, the tenant, the user of the space, right? Top line, you really excluding retail, have three different categories of space. You have office, industrial, and then research lab facilities. And the office sector was hit hard and immediate as a result of COVID. When in 2020, all the employees within about a 2-week period were told to go work from home, I always think had the internet not existed and had this happened 20 years before, everybody would have been back to work in a month or two. Okay, but because of Zoom and remote working and internet connectivity, people got very productive very quickly working from home. And I immediately saw CEOs and business owners responding favorably to what they were terrified about, which was people not being in the office. People got working at home effectively, comfortably, and this persisted for months, now years. And 5 years now, post-COVID, the business owners are having a lot of difficulty getting all the horses back in the barn, right? Behaviors changed, people have moved all over the country, remote working has become generally acceptable, hybrid working has become more often than not the standard. Many corporations still don't have policies. You'd be shocked, over 50% of the companies we talk to still don't have a return to office or remote working policy. They're completely laissez-faire and sort of let the employees do what they will as long as they're productive. It's shocking, actually, how little leadership there has been around this. And even those that do, don't fire people.
Because they can't enforce it, probably.
Yeah, it's essentially unenforceable, right? It's strongly encouraged, strongly recommended. And you're seeing some headlines, right, about some big companies threatening to enforce, threatening to terminate people. But most corporations in the country, particularly businesses smaller than 500 employees, just aren't willing to enforce this and generally seem to be doing pretty well with hybrid and remote working. So the net result of that is companies need less office space. Okay, so as COVID began in 2020, corporate America started shedding space, either not renewing their leases, putting space on the market for sublease, or when their lease expires, downsizing. And so we now have 5 years of lease expirations where corporate America has given back millions of square feet of space every year back to building owners and landlords, and generally availability rates around the country have hockey sticked. And it's going to be another 3 or 4 years of carnage of this because there's still a lot of leases that haven't expired. So there's a lot of 10-year leases, particularly in big metro areas, that were signed pre-COVID that still have yet to expire in the next 3 years. And we know by touring those companies' spaces that they're all sitting around on way more space than they need. So there's a lot of space still to come back. There's another big shoe to drop. And then you have industrial.
So the space is contracted, they're under contract, they're paying rent, but then in a few years from now, they will not do that because they don't need the space.
That's right. And we go out and walk space for a living. This is what we do. We're in the market. We're touring space with tenants, helping them understand what their future requirements are. And generally, we see companies sitting on between 20 to 50% more space than they need. So these are companies that have signed a 10-year lease pre-COVID for 20,000 or 200,000 square feet, and they're in partial occupancy. They're on multiple floors. They've already baked the rent into their cost structure. But when that lease expires, they're all generally going to get smaller. It's just a question how much smaller. And it's this sort of death by 1,000 slices thing where as thousands of leases expire over the next 3 years in each metro area, and let's say 80% of those companies get smaller, it's going to be a consequence, right? The amount of space given back versus what's retained or leased is going to be significantly less. So we'll talk about kind of the numbers, because most metro areas are now above 20% availability, some like Denver 25, San Francisco 33. So these are historically high availability rates, but you only have San Diego County, Orange County, Miami that are in the high teens. Pretty much every metro area otherwise around the country is above 20%, and that is the red zone for landlords. Once it's above 20%, it's clearly a tenant's market. Landlords are in turmoil. If it's below 10%, it's a landlord's market. And that range in between 10 and 15 is generally equilibrium historically. Above 15 means soft market territory. Above 20 is the red zone. So a lot of office landlords have significant turmoil today, and it's going to probably get worse over the next 3 years.
Now, what about the industrial space? Because industrial was booming, right? Rents were going up significantly.
Yeah, all that's true. So when COVID started, very quickly the consumer moved to online purchasing, right? They stopped going to their local grocery stores. And by the way, the government gave away trillions of dollars of money, right, at the time. And what did consumers do? They started spending, right? So their home improvement projects, Pelotons, you name it, people were spending trillions of dollars in the economy. Well, most of that spending was online. And so overnight, big retailers like Target.com, Walmart.com, Amazon needed tens of millions of square feet of space in big, big buildings that there was an extreme shortage of. So there was a run on big buildings. Anything over 100,000 square feet, you almost couldn't find in Southern California. Like back in 2022, in the entire Orange County, LA region, there were only about 9 buildings on the market over 100,000 square feet. Okay, now there's 100.
Wow.
Okay, so what happened was you had this huge buildup by real estate developers in 2021 and 2022 to meet this demand. Well, but developers kept going. So in 2023 and 2024, developers built another 1.2 billion square feet of industrial buildings around the country, mostly in the Sun Belt. So Inland Empire, Phoenix, Dallas, Atlanta, Denver. So 500,000 to 1 million square foot facilities. And so if you were
big industrial
huge industrial buildings for the e-commerce companies that they thought would continue to grow. Well, by 2023, we had started to normalize, right? Consumers started going out again. Online sales became into equilibrium. And so the Amazons of the world had as much space as they would ever need. In fact, Amazon has been a sublessor trying to get rid of space in the last 2 years.
So they're cutting back.
They're reducing back, right? They're now rationalizing their portfolio, and they're trying to move into owned real estate or custom-built buildings that have multiple levels in them as opposed to your traditional warehouse building, which is typically a single-level distribution environment. So Amazon has changed how they use real estate. And because of their low cost of capital, they've shifted to owning as opposed to leasing. Demand evaporated by the end of 2022. Meanwhile, supply kept coming, okay? And so now, across the country, because of the Amazons and others wanting to sublease space, there's actually more space for sublease in warehouse inventory around the country than office space.
Wow.
You know, everybody
So
talks about this glut
change.
of office space. There's 220 million square feet of office space for sublease around the country. There's 250 million square feet of warehouse space available for sublease. So the industrial side is now getting hit really hard, but nobody's talking about this, right?